Let me ask you a question. If I told you there was a business where 93% of customers lose, the house makes guaranteed money no matter what, and people keep coming back convinced this time will be different, you'd immediately assume I am talking about a casino, right? And honestly, that would be generous. Because at least in a casino, the rules are honest, you already know the odds are bad. The house edge is baked in and no one pretends roulette is a career path, but the same can be said for what I am going to show you today. And that is because it is worse than a casino. But before I jump in, just a quick preface, I know this video is a little different from my usual ones. If you are new here, I usually make videos about market news investing and all the fun ways capitalism can quietly rearrange your future while you are microwaving leftovers. But what I am talking about today is so widely accepted, so normalized, and so clearly a scam that I couldn't not make a video about it. So stick with me until the end, because once I lay this all out, I think you are going to feel the same mix of shock, anger, and disbelief that I feel. And if you like these styles of videos, let me know in the comments, and I'll make more, because the finance industry is full of scams. And the one we were talking about today is hiding in plain sight. I am talking about proprietary trading, or as it is more commonly marketed, prop trading. And before you start typing your comments, I am not talking about the glamorous Hollywood version of trading where some hoodie wearing savant turns 10K into a million while drinking espresso and whispering alpha into a Bloomberg terminal, because that version of trading is 1 in a million. In this video, I am talking about the more common version, the retail facing version, the one with challenges, profit targets, drawdown limits, and Discord servers full of people posting screenshots of green days right before they disappear forever. And if you think this is just some niche corner of finance, it is not, because prop trading has exploded in recent years. And videos like this are a key driver behind the industry's growth. Because these videos sell a pipe dream on TikTok and have quietly turned prop trading into a $12 billion industry that has Gen Z and Millennials hooked. But here's the part they don't put in the TikToks. Did you know only 7% of prop trading accounts manage to turn a profit? And of those 7% of traders that do manage to turn a profit, the average return is about 4%. Let that sink in, because let's say you beat the odds, you are disciplined, you are consistent, and you have an actual edge. You make it into the top few percent of traders who earn that 4% return. But then at that point, the question becomes, was it worth it? And the answer is overwhelmingly no, because 4% doesn't just underperform the SP 500. It underperforms gold, real estate, and even United States treasuries, meaning you can be a prop trader and stress so hard your hairline needs a trip to Turkey, pay mind, boggling fees, and spend years chasing profitability. Or you can do absolutely nothing, take nearly zero risk, get favorable tax treatment, and earn a comparable yield by just buying us treasuries. Because a 4% return is just underperforming. That is essentially matching the risk. Free benchmark. So if the odds are this bad, the returns aren't impressive, and the alternatives are objectively better. Why would anyone do this? And the answer is simple: social media. Because if you scroll through the finance side of TikTok for 5 minutes, you see the same stories on repeat. A rented Lamborghini, a broccoli, haired teenager flaunting money, and a PL screenshot with no context. They tell you anyone can be like them. That losses are just a part of the journey, and that failure only means you didn't work hard enough. And the worst part about it all is the sales pitch is working, because what was a nearly non-existent industry 5 years ago has now entered the mainstream. So the million-dollar question is, who is actually winning from this? And spoiler, it is not the traders. It is the firms that provide the quote-unquote funding, because here is how the business model actually works. A trader pays an upfront, non-refundable fee to attempt a trading challenge. In return, the trader receives what looks like a 50K or 100K trading account, but it is not real. It is a paper trading account on a simulated platform. Then the trader goes about trading. If the trader fails the challenge by hitting a drawdown limit, the firm just keeps the trader's original fee, the account is reset, and both sides move on. If the trader succeeds, the firm may pay out a profit split where the trader receives a percentage of the simulated profits and the firm keeps the rest. But here is the crucial detail that never gets mentioned. These payouts don't come from the market profits, they come from the pool of fees collected from the other traders who failed. And this is where the entire thing clicks. The entire business model of these prop firms is built on one statistical concept: gambler's ruin. The fundamental idea behind gambler's ruin is that in any game of chance where the gambler has finite capital and a non-positive expected value, it is statistically certain that the gambler will eventually hit a string of bad luck and go bankrupt. And it is not because the gamblers are stupid or because they reckless, but it is because you have a non-positive expected value and time is working against you. And I can break this down and show you in an even simpler example. Let's say you are playing roulette and you only bet black. There are 38 pockets on a roulette board and 18 are black. This means you have a little over a 47% chance to win given any spin. So you play a few rounds and you get on a winning streak. But that is where the gambler's ruin concept starts to set in. Because every single spin of the roulette wheel has a negative expected value. And it doesn't matter how calm you stay. It doesn't matter how good you feel about your system. The math doesn't care because a 47% win rate means you have a 53% chance to lose. And because of this, you will eventually hit a bad streak. And that is why the casinos don't need to cheat you. They just wait and let time do the work. Because the longer you play, the more certain your losses become. Not possible, not likely, inevitable. It becomes inevitable. You will lose. Oh shit. It's basically math as a weapon. But before I keep going, let us talk about another problem that has entered the mainstream. And that is online privacy concerns, which brings us to the sponsor of today's video, Incogni. Because according to the annual data breach report by the ITRC, the number of data breaches worldwide rose to 11% from 2023 to 2024. And these cybercriminals don't discriminate. They'll expose your phone number, your financial information, your health information, and even your social security number. And once your personal information is exposed online, it gets copied, packaged, and sold through data brokers and other sites you've never heard of. And that is how scams, identity theft, and other online illegal activities usually start. But Incogni helps reduce that risk by removing your personal data from the internet. Their automated removal process removes your personal information from hundreds of known data brokers. And if your data shows up outside their automated coverage, well, they have a custom removal feature where you simply just send them a link to where your personal information is exposed, and a dedicated privacy expert will handle the rest. Incogni offers a 30-day money-back guarantee, so you can try it out and decide for yourself whether it is right for you. So if you want to take back control of your personal data, you can go to incogni.com/casualfinance and get 60% off an annual plan. Thanks to Incogni for sponsoring this video and letting me focus on what matters, and that is exposing the fine print in finance. So, let us get back to the idea of gambler-s ruin and how it is used in the prop trading industry. Because when you apply the idea of gambler-s ruin in an industry where you have a 93% chance to lose, the odds are never in your favor, and that is how these firms make money. That is the edge. They don't make money by finding the next generation of elite traders. They make money by waiting for you to fail because gambler's ruin does require stupidity or recklessness. It just requires time and repetition. And when you combine the math with things like strict drawdown limits, capped upside, and reset to zero failure conditions, the outcome is inevitable. From these firms' perspectives, it is just a volume business. They don't care who passes challenges or who trades on their platform. They just care about how many people try. Because if 300,000 traders attempt a challenge and on average 279,000 fail, the firm is okay with the ones that succeed and cost them money. In fact, they like it because the ones that succeed are the proof of life, the illusion of hope, because they use the winners as marketing so they can reach a scale to where the business model makes sense and gambler's ruin can take over. And once you see it that way, everything clicks into place. Because prop trading isn't a story about bad traders making mistakes, it is a story about a system that only works if most people lose. Because in prop trading, you aren't the customer. You are the input, your attempts fund the system, your retries keep it alive. And your rare wins market it to the next wave of delusional traders. I remember back in 2021 when I first saw these ads, I thought, man, maybe I'm missing out. I saw a guy who looked like he was 19 sitting on a beach in Dubai, claiming he was managing 200K of institutional capital. I almost pulled the trigger on a challenge fee, but then I looked at the rules. Really looked at them. They have these things called daily drawdown limits. If your account drops even 5% in a single day, you re-out. Think about that. Even the SP 500 has days where it swings 2% or 3% if you re-using leverage, which these firms encourage. A 5% daily move is basically a statistical certainty over any 30-day period. The game is rigged so that even if you have a great strategy, a single bad afternoon of market volatility wipes you out completely. And then what do? You buy another challenge because you so close. That is the definition of a cycle of ruin. If there is one thing you take away from this video, please stay as far away from this industry as you can because these businesses sell a pipe dream and profit off your financial ruin. I've seen friends blow through $5,000-$10,000 on reset fees. That money that could have been in a broad market index fund compounding for their future. Instead, it's in the pocket of a CEO who owns a fleet of colorful supercars and doesn't actually place a single trade in the real market. It makes me sick to my stomach to see how they target people who are just trying to get ahead, people who are tired of the 9 to 5 grind and want a way out. The firms use that desire, that hunger for freedom as bait. But real freedom doesn't come from a rigged game on a simulated platform. It comes from patience, compounding, and owning actual assets. And if you've heard any trading horror stories from friends, Reddit, or even personal experiences, please drop it in the comments because the more we can shine light on this predatory system, the more we can help individuals from blowing money. They can afford to lose. Let us make this a space where we actually protect each other from the noise because the world is loud and the scammers are getting louder, but we've got a shield. And that shield is basic math and a healthy dose of skepticism. Remember, sometimes the best trade you can make is not trading at all. It's keeping your capital safe and watching it grow where the house doesn't have an edge. I'm going to keep digging into these corners of the internet so you don't have to. Stay safe out there, stay disciplined, and don't let anyone sell you a shortcut to a destination that doesn't exist. Peace out. I'll see you in the next one where we're going to talk about something that actually builds wealth. I promise it won't involve a broccoli haircut or a rented Lambo. Peace. Bye for now. Peace.